Mark Cuban recently addressed the controversy surrounding his Bitcoin sale and offered a pointed critique of how the cryptocurrency has evolved in recent years. Contrary to some reports, Cuban clarified that he did not sell his Bitcoin holdings in response to the Iran war. Instead, he offloaded 80% of his position when the price dipped, coinciding with a drop in gold to $5,000. He emphasized that his decision was based on his investment thesis no longer being relevant. At the time, Bitcoin was failing to act as the hedge against economic instability that it was originally marketed to be. Cuban pointed out that Bitcoin has long been promoted as a safeguard against broken money, central bank chaos, and economic crashes. Under that logic, it should not be tracking the movements of stock markets. He argued that Bitcoin's current behavior is a betrayal of most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Its foundational principles. Cuban also raised questions about the role of Michael Saylor in shaping Bitcoin's recent price action. Saylor's company, MicroStrategy, has become one of the largest institutional buyers of Bitcoin, and Cuban suggested that the recent price uptick might be partially driven by Saylor's aggressive buying. He questioned whether Bitcoin's current value is being artificially propped up by such corporate activity rather than organic demand. This is a significant observation, as institutional involvement is reshaping the narrative around Bitcoin's future. Cuban's comments highlight a broader debate within the crypto community about Bitcoin's role and whether it is fulfilling its intended purpose as a decentralized store of value. The market has seen significant volatility recently, with Bitcoin falling from an all-time high of $126,000 to around $76,000, a drop of roughly 40%. Despite this decline, Cuban did not express outright pessimism, noting that Bitcoin's value is ultimately driven by supply and demand dynamics. The recent price movements and institutional involvement are reshaping the narrative around Bitcoin's future. Cuban's remarks come at a time when many investors are reassessing their positions in light of macroeconomic uncertainty and shifting market conditions. The broader question is whether Bitcoin can continue to justify its valuation without aligning too closely with traditional financial assets. Cuban's perspective adds a new layer. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. To this ongoing discussion, the next signal to watch is whether institutional buying continues to influence Bitcoin's price trajectory and whether the market can stabilize or regain bullish momentum. The interplay between macroeconomic factors, investor sentiment, and corporate activity will likely shape Bitcoin's near-term performance. As the market continues to evolve, the question remains, is Bitcoin still the digital gold it was promised to be, or has it become something else entirely?